So hello, everybody. It's Danny Betancourt, your success coach for the Manteca Modesto Market Center. Today is Thursday, October 21st, and I am here with our affiliates because it is affiliate month. So tonight I have Mike Marcos from Easy Low Rates, and he's here to talk with you about first-time home buyers, all the different types of programs that are out there. So it's a lot of great information, especially when you're just getting those new leads from open houses and you want to know what is the type of conversations, what are the questions that you should be asking, and what are the meat and potatoes of information that you need so you have the right tools to be successful and be knowledgeable with dealing with those first-time home buyers or any buyers that haven't purchased in a while and are very curious about what's going on with the mortgage today. So with further ado, Mike, take it away.
All right, thank you, and welcome and good evening. I'm here to talk to you about what I look at as a lender as far as your buyers are concerned, okay? If you're taking notes, we're gonna talk about the 5 C's of lending, okay? The 5 C's are character, basically also known as credit. We look at 3 bureaus. We look at the FICO 2, 4, and 5. As far as credit is concerned, that's the only thing that we look at as far as your 3. I mean, people think it's Experian, FICO, and TransUnion, and Equifax, but it's really all 3 uses FICO 2, 4, 5. Just remember those numbers. And it's different than what your buyers are seeing on Credit Karma. So when they tell you, hey, I have a 900 Credit Karma, no. 900 is an impossible score on the mortgage world, but that would translate. I mean, I could take a look at the Credit Karma and I could give you an estimate of what we think the credit score will fall at. And Credit Karma is usually between about a 50 to about 150 off, depending on what algorithm they're using. But just know that the 3 that we use will take the middle score. It's not an average, it's the middle score, okay? Second C is capacity. Can your clients afford this house? Basically, we're looking at their debt to income ratio. If the debt to income ratio is too high, we're gonna keep adjusting that loan until it fits their debt to income ratio. Some people think, hey, I went on Zillow and I saw a house for $600,000 and it says the payment is only gonna be $2,500. No, the payment will be higher depending on your down payment, because some people see that on a website like Zillow or any other of the websites out there, and they always quote you something with 20% down. Well, most people do not have $120,000 just sitting around. So what I do as a lender, I'll basically counsel them on how to get approved for that home and give them a realistic number compared to what they see online, okay? Third C, we're looking at capital. This is their cash, money to close, including down payment and closing costs. Most people see $400,000. Hey, under FHA, I need 14 grand to close this. You're gonna need more than the down payment. What people don't count into it is how much closing will be. And the weird part, when you're doing FHA, you also need to adjust for mortgage insurance, taxes, and property taxes and homeowners insurance. So there's 3 other items other than principal and interest. You're talking taxes, insurance, and MI. So it's not just PI, it's PI, TI, MI. Fourth C is collateral. That's your appraisal. Just because they offered 500 for a property doesn't mean I could loan on 500. I need to send an appraiser out there and make sure this thing is worth 500. The good thing is lately, in the past, I would say 8 months or so, I have not had an appraiser miss. The problem is the timelines on appraisers. Appraisers right now, they're so busy. Like if you tell me, Mike, I have an appraisal contingency that's due in 12 days, I'm gonna tell you, hey, could you give me 17 on that? Because right now, to ask for 12 days, an appraiser is gonna ask you for a rush fee, and rush fees could be anywhere between 200 to 500 above your normal appraisal fees. So keep that in mind when you're making an offer. Don't just say, hey, we could remove appraisal contingencies in 10 days. Talk to your lender first and find out by them calling their appraisal management company, how long the turn time is for a particular area. Right now, the good thing is in our area, Central Valley, we're probably about 2 weeks, 10 days to 14 days. So we're not that bad. I've had horror stories over the hill in Fremont, Hayward, Union City. Oh my gosh, 21 days just to get an appointment. And then they're taking upwards of 10 days after they look at the property to get the report back to you. Whereas here, if they look at a property in the valley, you'll get the report back probably within 3 business days. So that's a good thing. I mean, we do have a lot of appraisers out here and the turn times are not that bad. Final C is conditions. This is our loan amount, our interest rates. Are they buying as an owner occupied? Are they buying as a rental property or a second home? The good part is the rates are so good right now. The differences in rates, assuming they put in enough down payment, could be minimal, like 0.5% between a non-owner, a rental property, and an owner occupied. So even if they are buying a rental property, it's still within reach. And good example, I just closed one in Modesto, 3.125 on a rental. I could not believe it when I priced that thing out. It was an amazing rate. And literally they just closed, I think it was on Tuesday last week. And they're already shopping for renters to get into that property. And I didn't know that the rental market was that hot because they got somebody in on a 1-year lease. I think they're moving in the first of the month.
Wow.
So, I mean, literally in already. So those are the 5 C's. That's character, capacity, capital, collateral, and conditions. And then now what we're going to do is we're going to talk about major life events that could affect your capacity or your character, which is your credit. We're talking foreclosure, short sale, deed in lieu, bankruptcy chapter 7 and chapter 13. But before I move on, do you have a question on the 5 C's?
I do not. I mean, I love how you broke that down because that makes it very, very simplistic to where as long as you have all of those covered, then, you know, you should be good green light on an approval.
Yes.
And that's very good to know because that is the meat and potatoes
Yeah.
of that, the 5 C's.
Yeah.
So I do love that.
Cool.
Yeah.
I have a question. So
Go
when
for
you're talking about, you know, the closing cost, principal, interest, so on and so forth, do you have like a blanket percentage of, let's say on a $400,000 home? I mean, just an estimate of what those are, that kind of an idea of what that would be?
Okay, so on your cash to close, you have your down payment and then you have your closing costs. And the closing cost portion of it actually depends on the time of year that you're closing. It could be anywhere from 1.5% to 3% of your loan amount. And the reason it varies is the property taxes. For example, right now, most people would have paid their December 1st property tax already. So I'm only going to collect 3 months worth of property taxes for a purchase. Whereas if I were closing in, let's say, April of 2022, I'm going to have to collect from April all the way to the next due, which is December. So on that month, it's actually 8 months worth of taxes.
I
And
see.
that's where the changes are. And a good thing to do is whoever your favorite title company is, go on their website and they actually have a closing cost calculator. And then they'll show you exactly what to plug in your dates, and they'll tell you how many months will the lender ask for.
Thank you for reminding me of that. I have used that before or looked at it. Yeah, there's a lot of variables. Thank you.
You're welcome. And then as far as the other closing costs, like your homeowner's insurance, have your clients, once they get into contract, it's weird. A lot of people don't think about it until it's like the day before docs and we're like, hey, who's your insurance company? They're like, I don't know. So part of our team, I mean, once that contract comes in, the first thing my team will ask for is, hey, who are you going to use for insurance? Because people don't think about it until it's like crucial. And then you're looking for a quote that's like last second, that's might cost you more. And then what you want to do is talk to your buyers and say, hey, who's your auto insurance with? And most of the time they could get a discount if they bundle, like that, what's her name? Flo from Progressive. So if they bundle, it's a pretty good discount. I mean, I've seen a big difference if you're putting auto and home together. So,
Yeah, I pulled up a checklist last night, and it does talk about reminding them about the insurance, and it's pretty detailed. So
yeah,
thank you.
yeah. And it's funny, all the variables to homeowners insurance, there's a lot of things that could move that premium up or down. I have one right now. Her insurance quote was over $4,000 for the year, but that was because she put her deductible at $250. Like, nobody has a $250 deductible. Move that deductible up to about $1,500. I don't think you're going to have any, claims in the next year because it's a fairly new house, and the premium went down down to like $1,500. So it was a big jump.
Wow.
Yeah.
That's a huge difference.
Okay. And then any other questions, Sandy, or you're good?
No, not yet.
Okay.
Go right ahead.
All right. So now we're going to talk about the major credit events. And when I say major credit events, for foreclosure, short sale, deed in lieu, bankruptcy 7, and bankruptcy 13. All the other chapters of bankruptcies are basically for corporates. So all you are thinking about is 7 and 13. Payback on 7 is not needed, whereas on chapter 13, you're still paying back. So it's not a pure bankruptcy that most people think it is. It's wage earner bankruptcy. So with that being said, you have conventional, FHA, VA, and USDA. I hardly use USDA in this area because of the loan limits, but that may be changing as the year ends, because I think they're going to have new loan limits next year. So for conventional, chapter 13 is not hitting you as hard as a chapter 7 because you actually did a payback on the chapter 13. So for a conventional loan, 2 years after your discharge, you could go in and apply for a conventional loan. For FHA, VA, and USDA, it's only 1 year. The government loans are more lenient as far as bankruptcies are concerned. So in a chapter 13, you could literally go into chapter 13 today and start your repayment. And a year from now, you could actually apply for a loan with FHA, VA, or USDA. And as long as the court says, hey, they made all their payments and they're okay to go into a loan, we could write a loan for them. We just have to calculate in the payments that they're making to the trustee of the bankruptcy. Secondly, the chapter 7 bankruptcy, that's a pure bankruptcy where you don't pay anything back. Basically, everybody on your credit profile can't go after you at all for what if they were included in the bankruptcy. So when you do file chapter 7, make sure that you include everybody on there. On chapter 7, FHA, VA, and USDA. FHA and VA are 2 years after discharge. USDA is 3 years, and conventional is 4 years. Okay.
Can I ask a question?
Yes.
You had mentioned, and maybe not everybody would know, but the difference between Calvet, the FHA, and USDA.
Okay.
The USDA is not one that's talked about a lot.
It's not.
Yes.
Okay, so FHA is basically the Federal Housing Authority, and it's for anybody. You, me, anybody off the street that's a U.S. citizen, green card holder can apply for an FHA loan. VA is set for veterans of the United States of America. I had a presentation one time where I said, have you ever served in the military? And this guy said, yeah. I said, cool. I said, where's your accent from? He said, Australia. And I'm like, oh, I meant US. Did you serve in the US? And he goes, no, mate. I'm like, oh, all right. Well, then you don't qualify. He's like, okay, you said military. I said, yeah, okay. So now I got to clarify that. US military, that's Army, Navy, Air Force, Marines, and Coast Guard. So any of those guys will qualify for a VA loan. USDA, the last one that we hardly hear about, is Department of Agriculture. They're basically farm loans, but it's not really for farms because Lathrop is in that list. And some of the houses, if it's within the purchase limits, can qualify for USDA. VA and USDA are both 100% financing. FHA is 96.5% financing. And conventional, you could go in as little as 3%, but there's a lot more detail needed as far as the conventionals are concerned. So.
Nice, that clarified that.
Yep. And then the other items, the major derogatory event for your credit is your foreclosure, short sale, and deed in lieu. If you guys run into anybody that's ever had a foreclosure, I could tell you that's the worst thing that we as lenders look at. If I see a foreclosure on a credit report, oh my gosh, it is looked at so hard by underwriters if there's anything within the past 7 years on that credit report. Even after the 7 years, it actually stays on your credit report 10 years. So there's like a 3-year window where they're still scrutinized pretty hard by underwriting. So conventional 7 years, FHA 3 years, VA USDA 2 years. So a military person is actually looked at as given more leniency, is the way we see it. So, I mean, for me personally, I love working with veterans because if they did it right, they did it right. So, and then we'll make sure we take care of them. And then deed in lieu and short sale for conventional, the only difference is it's going to be shorter. It's 4 years. The fact that you were able to short sell and satisfy the loan a little bit, not 100%, it's looked at better than if you had foreclosed on outright. So if you guys are ever out there door knocking or anything like that, or talking to buyers or possible sellers, don't let them go into foreclosure cuts, because that's the worst thing for us as lenders. If I see a foreclosure, I'm pretty much not even gonna put that much effort into it, because there's a lot of things that you have to get. I'm gonna have to tell you what to do, like from day one. So, hold one.
Okay.
So with those, all those derogatory items, bad on their credit report, but we could work around it. It's just when on that foreclosure part of it, it's still doable if you're dealing with a good lender. So you have to partner up with a good lender that's had experience with foreclosures, deed in lieu, bankruptcy, and always pick their brains on what can be done to mitigate some of the hits that your buyer will have if they ever have any of those major derogatory items. And then the last thing I'm going to talk about are your collections, medical and regular collections. FHA, VA, USDA, the government ones, will not look at it as hard as a conventional Fannie Mae, Freddie Mac would. As a matter of fact, FHA, VA, USDA, if it's a medical collection, we close our eyes. We don't even count it. It's like it never happened. It may affect your credit scores, but me as a lender, I don't really care if you have medical collections. So,
Wow.
yeah. And then the regular collections, if it's not more than 2,000 combined, we'll also just basically turn a blind eye to it. Yeah, but if they're like $2,001, you have to pay it off. So, yeah. Okay, open for questions. Anyone?
I have a question. When you say like on the collection and then you have to pay it off, sometimes when you pay off collections, it kind of like resets the clock.
It does.
So
It does.
would you pay that off during the close of escrow, or I would have to pay it off and then show proof that it's paid off?
I would actually have you pay it at signing. At
Okay.
closing.
At the closing?
Yeah, because
Okay.
if we paid it off prior to, and then we did what's called a look back on your credit report,
Mhm.
And when we do the look back, it's gonna show a new credit score because you did pay off a collection and it may have dropped you.
Yeah.
So we'll give instructions to your buyer. Hey, we'll just bring the money into closing and that's when it'll get paid off.
I actually had a DirecTV bill from years back that I didn't
Yes.
even know about. That was like $74. And
Yeah.
I'm like, oh, okay. And so
Yeah.
I went ahead and I paid it and
Yeah.
it dropped me
Yeah.
over 50 some out points because it like
Because you
refreshed it.
reacted. Yeah.
Yeah, and I
You
reactivated it.
Yeah.
And so my lender was like,
Yeah.
what the heck? Don't
Yeah.
do that.
Yeah.
So that was a big learning
Yeah.
lesson.
Yeah, so before you do it, I mean, once we pull credit, let us know if you're gonna do anything weird on your credit report. Like if you're, don't shop for furniture while you're in escrow.
Yes.
Don't shop for cars. I know Living Space is just open here in Manteca. Oh my gosh. I mean, I went over there. These guys are really good at selling you that credit card to get that 10% off. Trust me, that 10% off, it could wait. Wait until you have the keys to your house, then go get your 10% off over at Living Spaces.
I'm glad you mentioned that. That is a big thing to mention to people that once they get approved, do not advise your clients that it's okay to start home shopping, that they need to keep everything exactly the same. Don't charge any credits, don't do anything in
Don't
that
open
manner.
your credit. Don't
Yeah.
pull up the signing in a brand new car.
Yeah, don't pull up the signing in a brand new car. I've
Yeah,
had that
it's
happen.
happened. It's happened.
I've had it happen.
So yeah, keep that in mind.
Small
So
amounts
that
change
takes-
the whole dynamics of the loan, right?
Oh,
Even
yeah.
small
Oh my
amounts.
God. Yeah, I mean, at that point, your capacity totally gets blown out of the water, even for a tiny loan amount. We will have to re-underwrite it, your debt to income ratio. And with that being said, I see Ellen on the screen and I'm at 6:32.
You're at 6:32. Any other questions for Mike? Micheline, I know you just joined us. We will have the recording where you can go back because he covered some really great information at the beginning of the session. But if you have any quick questions for Mike, he is with Easy Low Rates. And he has been in this for so many years and has such a huge passion, just like the rest of us, with working with first-time home buyers and veterans. So now would be a time to pick any brain if you have any questions with him.
I have another question. I'm sorry, Mike. So
Okay, anytime.
as an agent, do you prefer we kind of dig in with our buyers on all of this information to kind of present it to you saying, okay, here we have a conventional loan and they've got no collections and da 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 da, or do you prefer to do that?
I'd rather just do the interview with them. Just put me in front of your buyers and I'm always gonna go through the 5 C's with them. If you go through the 5 C's and you miss one and they come to me and they have something already set in their mind that you told them, and I tell them, oops, sorry, can't happen. Then at that point, the buyers will have an issue with either you or I, and I'd rather not have that.
Yeah,
And
of course.
I mean, yeah, we've talked a lot about your clientele. So, I mean, you know how I work, and my communication line is open with you more than anyone else, pretty much, in the whole transition. So.
I'm just going to piggyback on that. And everyone knows my favorite saying is that we are realtors. We are experts in the real estate field and we stay in our lane. So when it comes to lending, we refer our clients back to the lenders. When it goes to real estate, the lenders will refer your clients back to you because you are the expert. Everything else, we can look at a home and we can say that we think the home has dry rot, we think the home has issues, but we're not the inspectors. We stay in our lanes. We always want to know just enough to have the conversation with them, to open up that conversation, that dialect, to get to the appointment. But at the end of the day, always refer them back to the lender because you don't want to misquote and then be uncredited for what you may have misquoted because we stepped out of our box.
Absolutely. And that was the right answer I wanted to hear, Mike.
Exactly. And like Sandy, my phrase is we stay in our lane. If you stay in your lane, there's no traffic.
Yeah.
Right.
Yeah. Yeah.
Perfect. Awesome. Michele, do you have any questions for Mike before we turn it over to Miss Ellen Peterson? Are you unmuting? Are you trying to unmute?
Uh-oh.
Yeah.
There's Ellen. Hey, Ellen.
No, okay.
Hello.
All right, thank you so much, Mike. That was awesome. Thank you, thank you. Okay, everybody.
Thank
So
you,
also
Mike.
to Ellen, I'm pretty sure I let you know that this is being recorded. So a lot of our full-time agents, they do work a lot of jobs, so they're not able to join us sometimes, but they do go back to these recordings. So this is very valuable information. And I thank you both so much for sharing your time with us tonight. So if you guys have not known, Ellen Peterson, a dear friend of mine, very knowledgeable, and she is with Old Republic Home Protection. And this is something that we need to make sure that our clients are covered. And there's different types of coverages. There's coverages for your buyers and there's coverages for your sellers. But I'm going to leave it up to the expert to talk about that. So Ellen, the floor is yours.
Thank you. Thanks, Danny. I really appreciate it. So hello. It's kind of funny doing Zoom in the dark. I'm like, okay, I'm not used to the dark, the night, Twilight, whatever.
Right?
I look better in the dark anyway, so it's all good. All right. So I've been with Old Republic Home Protection. Actually, today is my anniversary. And I know I've been getting all kinds of emails and phone calls and whatever. Happy anniversary. So I've been with Old Republic Home Protection for 28 years. I've been in the home warranty industry for over 30. It's almost 31 years in the home warranty industry. And I sold real estate for 5 years before that. So I am real estate embedded and I just love it. So I'm going to take it. Danny, you said about 20 minutes or so.
Yep, you got about 20 minutes.
Okay, so I'm going to take that much time and just cram as much information as I can for you into that. And am I able to share my screen at some point, Danny?
You know what? Let me go ahead and you should be able to go ahead and give it a shot.
Okay, I'm not going to do it right now, but I mean, I could, but we'll just wait. Well, I'll make you get up again in a minute. So what I wanted to start off by saying is, before I do share my screen, is that I feel bad, Danny. You don't have to stand there. Are you good? Okay, good. Is that what a home warranty is? We want to start with home warranty 101. So what a home warranty is we cover the systems and appliances in the home. So if you think about what we do as far as protecting your clients, it's all the functions of the house. So everything that is a working, moving function of the house. So electrical, plumbing, think about it, water heater, air conditioner, all the systems in the kitchen, the dishwasher, the oven, the garage door opener, just look around your house, ceiling fan. Sorry, I just looked at my ceiling fan, so it's like everything that moves, okay, and is a function. If it's structural, that's homeowners insurance. So I always like to say that first with people who are newer in the industry, because they think, why do I need a home warranty if I have homeowners insurance? Totally separate. We work side by side. We would cover the problem. So if you have a major water leak, let's just say even minor, it could even be minor. Or actually, I'll tell you one I'm working on right now. People moved in, and it's just closed escrow 2 days ago, and they've got water gushing through the ceiling into their living room because it's coming from the bathroom upstairs. And it's just, they moved in the house, they started using the bathrooms, and they're just going, with this water gushing. So of course, they're going to call a home warranty, and we're sending a plumber out. Actually, he was out this evening, so I'll find out tomorrow what happened. But we send a plumber out, the plumber stops the problems, fixes the problems, but the secondary damage that was done to the ceiling, maybe to the carpet downstairs, who knows, that's homeowners insurance. So you need both. So when your clients, or when you're talking to your clients, let them know we work hand in hand. If they didn't have a home warranty and that happened, they would have to stop the plumbing issue on their own. because homeowners insurance doesn't cover that. Okay. So that's why you need both of us. So what we are also is a year policy, sometimes a 2-year policy. It just depends on what you order and what you get for your clients. And I'll show you in just a few minutes where you can get that and where you can see that. But we are renewable every single year. And I encourage people, of course, to renew it every single year, because just like car insurance, the second you don't renew, the next day you crash your car. Right?
Yep.
So, yeah. So people call me all the time and they go, oh, I didn't renew my policy and my water heater just blew and I've got a flooded garage and the water heater doesn't work. The policy expired 2 days ago. Okay, well, you should have renewed your policy. So
I have a question.
I was going to say, Sandy, you look like you have a question.
I always do.
It's all good.
Okay, let's say that you get a home inspection, right? And it's not, there's a problem but it wasn't discovered by the inspector. It's not in the report. You move in and then right away this is, apparent. I mean, it's there, that the issue. Do you, I guess, is the inspector held accountable for that in any way?
Okay, so here's how the home, and that's a really good question. Here's how the home warranty works. Let's just use your same scenario. So escrow closed, your buyers have an issue. And I always love to do water heater just because nobody likes not having hot water. But anyway, so your buyers have an issue. They call and say, I have a problem. I don't have any hot water. The very first question that we're going to ask them is, when was the last time that you had hot water? Or when was the last time that the water heater worked for you? If they say never, we never could use it, it never turned on after escrow closed, now it's going to be deemed as a pre-existing condition, because everything needs to be in good working order when the policy goes into effect. I always slow down so much when I say that sentence, just because it's so important that you know that, and that you let your clients know everything needs to be in good working order when the policy goes into effect. And if they have that in their head, they won't panic when they call in either, because if they turned on whatever it is and they had hot water for 2 seconds and then it died and then it went out, then yes, it would be covered. But if they call us and they say, I went to go use my stove, and for the first time I went to go use it, it doesn't work. And, and the seller should have fixed it. And I knew there was an issue with it. And they start going, blah, 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 blah. Then they're putting a wrench in their whole service issue, and it wouldn't be covered. And then you would call me and then we would backpedal and then we would anyway, that's a whole other issue. The reason why I'm here for you is for those kind of issues. When people say things that they really don't know what to say, and it happens a lot. So coach your people to just calm down and just know that you had the home inspection. Everything was working fine. When they moved in, as long as everything's still working fine, if something goes out, they can call us and place a service call. And I'm not really sure if I answered your question correctly. I just know that we don't ask for the home inspection unless it helps.
Okay.
So did that kind of answer your question, Sandy?
Yes, it does. Thank you.
Okay, you're welcome. And yeah, and I think it's really important that you're not only, realtors, you're also therapists, you're counselors, you turn into BFFs for some of your clients, of course, but really talk to them and just make them understand. It's like how I like explaining home warranties is, and I didn't used to, because I don't like saying, okay, we're like, car insurance, but really you can't crash your car and then get insurance. You get the insurance and then you crash your car, you're fine. Well, hopefully, but it's so you just, that kind of mindset is really important. They understand that. Okay. And then what else is super important is the kind of coverage that you get your clients. So when you're looking at the policy, and yes, I'm going to show you in a second, but you're going to, okay, so this is the front of the policy that you've all seen. It's weird doing it backwards with Zoom, but I always tell people when someone says, well, what's covered? You go, look, and you just flip it to the back of the plan. So that, I mean, that's my whole visual right here, because we make it simple. You don't have to flip through the pages and go on page 8, section 9, blah, blah, blah. No, just flip it to the back of the plan. And then you could see all the coverages, you could see all the pricing, and even the seller's coverage that we're going to discuss in a second. But it's all right there and it's simple. So make sure that they read it, they look at what packages they want and what options they want. And if there's not another question, I'll do the share screen now and I'll show you where you can get that. You ready?
Yeah, I'm ready.
Okay, here we go. All right, so we're going to go to, this is our website, and this is orhp.com. Okay, so you go to this website, and where this says right here, Agent Toolbox, on your own. So the next time you go in, click on that and register, please. If you guys either of you have registered yet? Sandy, I know you have, Danny. You're all about it.
I believe I have, yeah.
Okay, so that's where you find a lot of marketing tools, where you can order policies, where you, and plus where I capture your email in our system. So you get all my valuable emails that I send to you.
I definitely have.
Oh, excellent. Oh, I don't overdo it. It's all good information.
No, you don't.
Thank you. I know some people do, and then you opt out and all that good stuff. Okay. So go to Real Estate Professionals, and you'll see, as you do your cursor over each one of these, there's a lot of choices. But when you're going to get the policy, what we're going to do first, the toolbox I just talked about is right here, but that other link and below is so much easier. There's more agent resources right here, where it's like, if you want some continuing education information, or to go to marketing tools. But for right now, I want to bring you to this page. So I'm teasing you right now because I really would like for you to play with our website. So these are all the states that we're in. All of the blue states are, I wish we were in Montana. Wouldn't that be nice? But we're not. So anyway, you click on California right here, see all the, or you could just click right here. That works too. And there we go. And then it has our plan brochure right here. So you click on this. We just came out with a new plan. So you're going to only get the new plan on the website right now. And I just want to show you how easy it is to get to it. So this is how you would save a PDF, first of all. And then just like I said to you a minute ago, I am going to go right to the back last page, because all of this says how wonderful we are. Oh, I'm going to stop actually at this part right here. We have, hold on, where is it? I was going to say, I could go through all this. I could take I don't know, an hour and a half and tell you about everything. Oh, this is where I was looking. So this right here, the porch home helper, a lot of people don't even realize that we have this. Every time you order a home warranty with Old Republic and close your escrow, your clients get $100 in coupons, basically, for porch. And what porch is handyman help. So I've used this help. Danny, did you know about this one?
I did not. You just blew my mind.
I know. So you just send this is new. It's only new as of last year, but you send your people, tell them to look at their policy. They go to porch, they give them their policy number with Old Republic, and they get $100 off things like, you see a guy installing the TV, but I got a new patio set. And so I called them, and they came over and put together my patio set, and it's 4 $25 off coupons. So it cost me $100 through porch with my coupon to have them put it all together. Well worth it for me.
Plus, you guys, you send out reminders, right? On the, like the smoke detectors and things like that.
Oh yeah.
Okay.
Oh, we send out all kinds of good stuff. And what I've opted in for is, I don't like fluff. Unless it's in my pillow, I really don't like fluff. I like information. I like education. And I am zipping through all of this. You can look at all the details and all that later. What I want to do is go straight to the last page. But yes, so you'll get things that I send to you, you can pass on to your clients, which is, I think that's really important, that you keep educating your clients as well. Okay, so this is the back page that I flipped to, live here. And this is where you can show your clients what we have to offer. It is so critical that you look at the house itself, the age of the house, what the house needs. As far as like on this side, these are all options. So in other words, if you have ornamental fountain, I have a funny story to tell you, it just happened today. So someone called me and they said, I want to send you the policy that I just ordered. And it was a homeowner or that my agent ordered for me. And it was a homeowner because the agent said, here, call Ellen, which is fine. ACE, always call Ellen. Do not forget that. I am your ace, just so you know. Anyway, it's all good. So she called me and I said, can you send that to me? Her agent had gone down these options and clicked every single one of these options, thinking I'm going to give her the best plan and I'm just going to click them all. It was like an almost $3,000 policy. And I said, do you have a water softener? Nope. Do you have solar? Nope. Do you have a
Cool.
it was like, nope. So anyway, I customized the plan to her. She wanted the platinum with the washer, dryer, refrigerator, which is this best value here on the end, and the pool. And that was it. So just make sure that, you pick policies to match the house. Okay. I just thought that's the first time. In all these years, first time that ever happened. So when you're looking at the plan here, the ultimate that's right here in the middle, that is for newer homes. It doesn't cover nearly as much as the platinum coverage, which is right here. And I'm going to scroll down a little bit more and show you why. So you will see on the bottom with the platinum that it covers, it doesn't say it right here. It's on page 2 of the policy, but it's $1,000 more in code upgrades and structural modifications. And that's for like when we replace a big ticket item, air conditioning, heating, water heater. Believe me, your people would be very happy not to have to pay out of pocket if they have a big item to be replaced. They always have to pay a $75 trade call. Okay. Because that's part of it. They call us, we send someone out, they pay $75. They either get their stove repaired or they get a new stove. So if we can't repair whatever the problem is, we replace the whole thing. That's
Can you
huge.
point to where you were again on the screen? Oh, there you are.
Oh, right here. Now this
Okay,
is,
right.
these are the bullet points I'm looking at. So this right here, I know, thank you. I'm trying to rush through it. I know, I seriously could go on forever. So this right here is what you would get for the ultimate protection. And this part down here is for the platinum.
Okay.
I know it's hard because I don't have the whole thing on here, but what my whole point I want to give you right now is that if you give your clients the most coverage that you could possibly give them, they will be happy with you forever. If you give them a warranty and you don't give them the best coverage and they have to pay or something's not covered, and they will come back at you and they will say, why didn't you give me the best coverage? Because now I have to pay $1,000 out of my pocket because all we got was the ultimate. I'm not saying, see right here, the ultimate that's right here. I'm not saying, now my arrow's upside down, but that's fine, that it's bad coverage. I'm just saying that you need to make the coverage match the house. If the house is only 3 years old, 4 years old, 5, ultimate's perfect. And this means washer, dryer, refrigerator right there. So it really is, I'm giving you an assignment, and that's to read the plan, to really look at it, to understand it, because it's important and it does really reflect on your future business, and how I think Danny probably could say something about this, right?
Well, I can say that I am a diehard Old Republic home warranty. And when I started out in my business, it was very important. And at that time, it was a different time to where we were able to ask sellers to pay for part of the home warranty. And I'm fortunate now that I actually gift to my buyers their first year home warranty. And that's just because that's where I've gotten to my business where I'm able to do that. And I always give them the ultimates and then I tailor it. And so if they have a well and pump, then I add on a well and a septic. If they have a koi pond, then I add on the ornamental fountain versus the pool pump. And so, or if they have a pool, then I add on the pool. But it's the little things like that that really lets them know that you're not just there for the sale, you're there for the relationship, because their coverage and them moving into a brand new home is important to them to make sure that they're covered for the first year. And $75 to have them come out to repair or replace versus thousands when you very first move in speaks volume for you and the referrals that they send you down the road, because they know that you actually cared for them and made sure that they had the coverage.
That was awesome.
Yeah.
The last home that I had, I had a, the check sheet like this, and it's very detailed. And then I got a binder. Anything that I purchased after that, the receipts, the owner's manual, whatever it is, paper or hole punch them in the binder so you have all of that, and even the color, matching or whatever for the paint. You have a page that has all the different, in case they have to do touch-ups. I mean, I just went to that binder and I had everything there. So it really makes your life easy when you're trying to figure out what colors on your walls, because you just need to fill those holes or something like that. And
excellent.
Here everything's in it right at your fingertips. So
yeah, that's excellent. And I just wanted to add to what Danny just said too. It's important that, I mean, of course, giving them the coverage that is great for the home, but letting them know they have 60 days to add whatever else they want, because they might be buying a new washer, dryer, refrigerator and want to add those, or used, or moving in their used ones, or want to upgrade a bit. Let them know they've got 60 days. They can add whatever coverage they want before they break down.
So Danny, do you do that after the closing, for your clients? Or
no, I actually, it's part of the closing package.
Okay.
So I actually go and order, the moment I get them in contract, I go and I go onto the agent toolbox and I order it right away, and I send the invoice to the title company, and then that way they know who to bill accordingly of who's paying for the policy. So, I mean, like I said, there's a lot of different ways. When I started out, I would split the cost with my buyers. If I did not have the funds, the buyers would pay all of it. So it's always a case by case. And as I've always told all of you guys that, the way I do my business is not the way you're going to do your business. And that is something that I built myself up to, that I was able to gift those to my buyers. And so it's always, it's the standards in your business, but it's very important to know that they have this option and these coverages. And it's the little things, Ellen, I'm just going to point in, because I know you want to go into seller's coverage, but I think we're going to run out of time.
I do.
I know, but maybe I can coerce you to come back next week to talk about seller's coverage, because seller's coverage is very, very important. And it's something that I would like to even know more about for all of my listings in the future and everything. But one of the huge things that I do love emphasizing to my buyers is the rekey. Ellen, you want to tell them about the rekey? I love the rekey.
I loved how you noticed I stopped at seller's coverage because I was going to chat about it. Yeah, I can come back another time and just talk about our tools. That's probably a good idea. So the rekey is something that's new, and as of a couple of years ago, and it's simple. Once escrow closes, so once it records, your clients call us once it's recorded, and we will send out a locksmith. They pay $75 and they will get 6 locks and 4 keys. So rekeyed. So that's huge. Yeah. And I'm amazed at how much money we've spent on that since we started covering that.
I love you for that. That is such peace of mind. That just will go, a long ways for clients.
Absolutely.
I love it. They go to Home Depot and they buy key sets, and if they want the key sets there, they got to pay at least $30 a new key set. So, I mean, you are once again being the savior to your clients. And it's all of these little things that, once again, is important to make sure that we are tooled with all of these great tools and have these great affiliates with us, to where it just makes us more as Keller Williams agents, that's why they are with us.
Thank you. Thank you. And I
Ellen,
know
you that you are my ace in the hole.
I know I am. I am your ace in the hole. Always call Ellen.
I am a diehard fan. So thank you so much. I know it's 7 o'clock, everybody. I want to respect everybody's time. But Ellen, can we count on you to come back next week and talk about Sellers Cup?
Yeah, we'll plan it. We'll schedule it. I would love to come back and talk to you about the tools, including that.
Fantastic. Fantastic.
All right.
Awesome. Yay. Well, thank you everybody for another successful Twilight session. And I look forward to seeing you all next week. Have a
Perfect.
great night.
Bye-bye.
Have a great night.
Bye, everybody.
Bye-bye.